Joining us now is Citi Senior Equity Research Analyst Tyler Radke. And Tyler, it's good to see you.
Thanks for having me.
I mean, have you been busy just kind of talking clients off the ledge? I mean, how has it been? Given the fact that so much of the group has undergone this indiscriminate selling, how do you advise doing an assessment and figuring out, what's been overdone?
Yeah, I'm not sure if my job as analyst or therapist, right,
sure.
with some of these moves. But look, I think this has been painful, really unprecedented, the volume of selling. And I think what's been particularly disorienting for investors is Q4 earnings have been pretty solid. You've seen beats and raises, new business trends have accelerated, yet pretty indiscriminate selling. Now, I think what's interesting, though, last week we had some companies report, HubSpot, one name in particular. You've actually seen that up 3 days in a row after some pretty indiscriminate selling. And this AI trade, this concern on AI, is actually broadened out beyond software. So it feels like we're getting close to the bottom. I would say you still want to be selective. There is a lot of uncertainty out there. I think these stocks are pricing in a lot of that uncertainty. Our favored names are the ones that we think still have the best sort of AI stories. So those tend to be names like Microsoft, the big hyperscalers, or names that really have exposure to this data layer, where they have business models that monetize and generate revenue from compute, which is ultimately going to be the future of this industry.
Microsoft is in such an interesting spot. It kind of brings together so many of the dominant themes. I mean, investors just feel like they've lost all patience with the companies that are spending all their free cash flow in CapEx. And so how do you isolate kind of the software dynamics within it and their entrenched place in terms of the enterprise?
Yeah, so it's a unique company, right? Yeah. They have the second largest cloud business on the planet, but they also are a large application business, productivity. We're all using Windows. My view is they're well positioned on both. I think people look at it and say, hey, this is a software company, isn't there risk? But they have the distribution, they have the users, they have all your data too. Your email, your texts and Teams, your note taking in OneNote. So all that data is ultimately what's going to be powering AI. And so whether it's Copilot, and look, as a Copilot user, I've been a little underwhelmed, but we're starting to see that momentum really increase. They talked about accelerated usage. I've noticed I've started to use it a little bit more. We think you could potentially see some price increases down the road. And then on Azure, right? I mean, they're growing below where actual demand is based on intentional supply constraints that they have to make. So ultimately, I think the numbers are going to continue to accelerate as we look at the revenue growth. We do think that they're well positioned, and it's actually trading at a discount to the S&P 500. Yeah. It's only happened once in the last decade. That's proven to be a good buying opportunity when that's happened.
So where do you think companies are going to have a harder time kind of getting back the benefit of the doubt? What types of companies seem like they're in the penalty box to stay?
So I think that the issue really lies if you are a software company and you are not accelerating growth. That's what investors want to see, which is tough, law of large numbers, or you're giving some meaningful margin improvement. Because software, for the most part, it's still not that cheap, right? There's a lot of stock-based comp, which has drawn a lot of scrutiny. So if you're not accelerating growth and you don't have a great margin story, and maybe you're viewed as one of these legacy software as a service businesses, I think those are going to be sort of in a tough spot. Now, maybe it gets cheap enough, you get value investors attracted, but those would be the type of companies that we would sort of stay away from.